Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning, folks. Welcome to the U.S. Markets Wrap with me, Ryan Huang. And we've got a mixed session overnight. The S&P 500 clawed back earlier losses to end the session higher as traders nervously look ahead to President Donald Trump's tariff plans. The broad market index added 0.6% to close at 5,612. At one point, it fell as much as 1.7%. The Dow Jones Industrial Average was up 418 points. That's 1% higher to settle at 42,002. And the Nasdaq Composite was underwater by 0.1%. And we've got some tech names under pressure, including Tesla, lower by 1.7%. NVIDIA lost 1.2%. For more insights, we are joined by Sevasti Balafas. She is the CEO at GoalVest. Good morning, Sevasti.
Good morning. How are you?
I'm doing great. How are you doing?
Doing well. Thank you.
All right.
Thanks for having me.
Great to have you on. Not all is well in the markets because we've got some choppiness playing out as we brace ourselves for April 2nd when Liberation Day, so-called, is going to be rocking markets further. Walk us through what's happening here in terms of the market reaction, what's being priced in right now.
Yeah, that's a great question. That's what's on our minds. Well, the thing is, we don't have enough information yet on what we end up seeing on April 2nd. We thought that the tariffs that we would see would be limited to what were called the 10 to 15 countries with the highest tariffs against the U.S., but President Trump's comments yesterday seemed to imply that actually it's going to be wider spread than that. Markets did start the morning more negative and turned more positive towards the end of the day, just thinking maybe actually it's not going to be as bad as President Trump said yesterday. But the reality is we don't know. We don't know the amount. We don't know the duration. We don't know which countries. I do think that maybe if things aren't as bad as feared on April 2nd, just a couple of days from now, then we might see a relief or rally. But it's really up in the air at this point. So maybe we end up getting some positive news. But my suspicion is even after April 2nd, we're still not going to have all the clarity that we need to move forward.
Yeah, it seems like we've got a lot to look out for when it comes to the details. In the meantime, we've heard, like you mentioned, Donald Trump saying these tariffs will target all countries instead of the narrower and perhaps more targeted approach that some were hoping for. Is that something that will remain to be seen? In terms of the market action so far, we have been seeing some rotation of sorts away from the more expensive names. Walk us through what you've been observing.
Yeah, it's true. So as you may know, the S&P 500 has been up the last couple of years, over 20% in 2023, over 20% in 2024. The biggest part of that, NASDAQ stocks, so tech stocks, were actually up a lot more than that, 70% over the last 2 years. We're seeing a rotation out of that. So there's been some concern about potentially overinvestment in AI. We've had a couple of comments that were made to that effect, and NVIDIA is down, and Tesla certainly down, although Tesla has its own issues, which has become a lightning rod, I think, for some of what's happening in our government. But NVIDIA down, and the other tech names, so Google or Microsoft, those are down as well. But we are seeing a rotation into those defensive names. So healthcare, for example, is up and positive on the year, and we expect that to continue. Or energy sector, another example of stocks that are up. So, and consumer staples, of course. So there has been, what's been driving the markets in the U.S. over the last couple of years has been tech. We're finally starting to see a broadening out of the tech and into those more defensive sectors. Of course, also international stocks. This hasn't happened in a long time, has outperformed U.S. stocks so far for the year.
Yeah, we did get one tech IPO this week, and there was the CoreWeave listing. And on day one, we saw it slip nearly 10%. How much does that go into, I suppose, the risk appetite in the market right now? And CoreWeave, of course, is in the space of providing cloud services to AI vendors.
Yeah, it's true. So there's been a few things that are happening with CoreWeave. First of all, the valuation of CoreWeave has really increased dramatically over the last just 15 months. It wasn't only 15 or 18 months ago that this company was trading at a $7 billion valuation or $7.5 billion valuation, and now it's IPO'd at around $20 billion. So you did see a pullback after that, down 10% since the IPO, even as of today. But I think it's a couple of things. First of all, we have more company-specific items, so we have more information on the company itself. They have a concentration of clients, for example, or customers, so that's been a concern. There's some stock-specific news that is weighing on the company, but the bigger part of it, I think, is the market sentiment. It's risk-off. There's concern about AI spending in general. So I think it's both market and a little bit of company-specific that we've seen a pullback in the price since the IPO. But again, if you just go back 18 months, the price is significantly higher since even then.
All right, so that's a reflection perhaps of the market mood right now. All right, talking about what is shaping the mood, we've got data coming through these days, and we've been bracing for perhaps a recession around the corner. Does the data point towards that eventuality?
So far the data has been holding up. We had the services PMI that was out last week, and that's been surprisingly strong. The manufacturing PMI, though, did come down and below that 50 number, which is contractionary. It's not a trend yet, but we are paying attention to that data point. But the soft economic data, for example, around consumer confidence, that's been at historical lows. We just got that data. And business confidence has stalled. I mean, time and energy has been spent around what do we do around these tariffs as opposed to thinking about growth projects. And I think that's been weighing on investor sentiment. So while we haven't seen unemployment rates go up, we haven't seen hard data yet look very concerning. We are paying attention, and of course, to the inflation number, because based on what's happening with tariffs, I think we get into an environment where growth slows down, but inflation ticks up, leading us to a stagflationary environment.
Yeah, very tough for businesses to figure out what to do budget-wise, plans-wise, with all the back and forth around tariffs. What should investors do with this backdrop? Now, you've got things going back and forth. You've got the rates path still quite uncertain, even though the Fed says there's two more on the table. What is the playbook here for investors for the rest of the year?
I think we need to be cautious. The upside in equity markets or U.S. equity markets is limited at this point versus the downside. I think there's more potential downside. Investors really need to be cautious with new cash coming in. If there's investments to be made, certainly thinking about dollar cost averaging, but also looking to see further deterioration in the S&P before I would add money to U.S. stocks. Having said that, having a diversified portfolio, that's the key. And not only in stocks versus bonds, but adding private markets as well. Private credit is an area that we like. Private equity is an area that we like. Structured products that take advantage of volatility. The main idea, though, is diversification, being patient with cash, because I think there's more downside before we have clear skies for upside performance.
All right, diversification is key as we brace ourselves for perhaps more rocky times, and also towards April 2nd when more details perhaps on tariffs will be coming through. And we've been in conversation with Sevasti Balafas. She is the CEO at GoalVest. Sevasti, thanks for your time this morning and your insights.
Thank you.
All right, great chatting with you. Stay on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.